Hi there, Tanisha Coffey here with Rock Solid Financial. Thank you so much for joining me today for funding your business with life insurance products. Rock Solid Financial is a consultancy firm that specializes in providing business owners with life insurance based strategies for protecting and cash flowing their business, tax free retirement planning, and financial planning. So if you need assistance with any of those areas, feel free to reach out. All right, so go ahead and we're going to jump into the presentation. And we're going to start with using life insurance for starting your business. So, oftentimes, many entrepreneurs will be looking for loans to start their business. And one of the most popular places that they look is the Small Business Association. For SBA loans, many of them require life insurance policies as part of the lending process. So, if you were thinking about applying for an SBA loan, then you should also be thinking about applying for life insurance. Excuse me. So typically, the SBA loan process will take you some time, a few weeks, maybe months. And life insurance policies can take a bit of time as well. Can you get immediate approval for life insurance policies? Yes. However, those are policies that are not underwritten, which typically means that you will be paying a higher price for those policies than if you were to go and actually have underwriting done. The process of underwriting can take around 2 to 3 weeks if the process is smooth. If there are challenges with your process, it could take longer. So, again, if you're planning on applying for an SBA loan, then you should also plan to go ahead and get a life insurance policy in place as well. Um, Another way that you can utilize life insurance to help you with getting your business funding is if you're going through a traditional lender. Sometimes traditional lenders will be more willing to provide you with a loan if you offer to do a collateral assignment of a life insurance policy as collateral for the loan. Now, what happens in those situations is you will have a life insurance policy, say you're wanting $100,000 for a loan. In that case, you would want to have a life insurance policy for $100,000. And what you would do is you would assign that policy to the lender as collateral. So if something were to happen to you before the loan was paid off, the life insurance policy would be the monies that would be used to pay off the loan. So this is something that you would want to do um, when you have more than one life insurance policy, because you don't want to not leave your family protected or leave yourself protected if you needed money to tap into for yourself while you were alive, or if you wanted to leave life insurance monies for your family to help them to can carry on in the case that you were gone. So typically, it's a good idea to have a specific life insurance policy for that you're planning to use for business for this purpose. Okay. Now, another way to use life insurance when you're starting your business is to tap into the cash value of an existing life insurance policy, or you can cash in an existing permanent life insurance policy. So, in both of those situations, it gives you access to monies just in different ways. If you have an existing life insurance policy that has built cash value over time, then you can take that cash value out and use those monies to help you with funding your business. And it won't cost you anything to do that. Now, if you have an existing life insurance policy and you do not want a permanent policy and you do not want to keep that policy, then you can actually cash it in, which means basically you're selling it and you can get cash back for that. Now, please keep in mind these things. So, one, if you were going to do this, again, make sure that you have a separate life insurance policy in place so that the reason that you originally got the life insurance policy, which was likely to protect yourself and your family, you still have that in place. So, be responsible in doing that. And then another point to really consider is that if you do decide that you want to cash in your policy, understand that it is not a dollar for dollar exchange. Just like most things, when they're resold, the value is less when you sell it again. So when you cash in, say, $100,000 permanent life insurance policy, it won't be worth $100,000 to the person who buys it. They're going to want to buy it for less than that. And you will have to decide whether that lesser amount is a feasible option for you. But that is one way that you could, tap into life insurance when you're starting your business. All right. So let's talk a little bit about cash flowing the business, and specifically cash flowing the business when something happens to you. Okay. So there's two types of insurance that are particularly useful to help you cash flow your business when disability or illness strikes. So the first type is business owner's expense insurance. And sometimes it's called business owner's overhead expense insurance or disability overhead expense insurance. And basically, what happens is this type of policy pays you a benefit to your business if you, as the owner, become disabled and cannot work. And so the business can use that money for its expenses, the business expenses, paying salaries, utility bills, rent, things of that nature that are recurring expenses that your business has that are necessary to keep the business up and running. Now, if you notice, when I spoke about what it can cover, I did not say that it covers your income. It just covers the expenses to the business. So what you would want to do is to couple your business owner's expense insurance with a disability income insurance policy. So if you're unable to work due to an illness or an injury, individual disability income insurance can help to replace a portion of your paycheck so that you can meet your personal expenses and continue your life. Now, it's important to know that disability income insurance does not pay you 100% of your regular income. So if you normally brought home $4,000 a month, it's not going to pay you $4,000 a month. It's going to pay you a percentage of that. Okay, so keep that in mind when you are, planning, or if you opt for one of these policies and something happens, it's not going to be 100%. If you work with a broker who's thinking strategically, there are ways to up that amount that you get, the percentage that you get, but that's a conversation that gets a little bit more complex, so we're not going to delve into that today. All right, so another way to cash flow your business is when you're thinking about the future, right? So not necessarily something has happened to you, but you just want to have access to money in order to do the things that you need to do for your business. So there are two ways to do it. So we talked about earlier using existing life insurance policies. We talked about it as far as starting a business. Those same principles apply, and you can use it if you needed to cash flow your business, right? But those are typically more of a surge of cash, like a lump sum kind of surge of cash, particularly if you are cashing in your policy. If you were to tap into the cash value, obviously, that could be a one-time takeout if that's how you were, doing it. If you want to create more of a cyclical opportunity to be able to tap into money, you want to try infinite banking. Infinite banking uses a permanent life insurance policy so that you can kind of create your own bank that you can tap into whenever you need it. And so this is actually a really great option for people who are starting a business, because if you start your business and you also start infinite banking at the start of your business, then a few years down the line, when you're ready to grow and scale, you will have monies in there that you can tap into, and you won't have to rely on business loans or business credit as much as some other businesses may have to do. Now, of course, how much money is in that bank depends on you and how much money you put in, and how you responsible you are with that. But it does provide a really great opportunity to have cash flow. All right, so when businesses, as they mature, as you go on, there's going to be people who are going to leave the business. There's going to be people who are going to prove to be truly valuable to the business. So there's a type of insurance called key person insurance. Key person insurance protects the business owner if you have a key employee who becomes totally disabled due to injury or illness, or if the person happens to leave the company and that puts the company in a bind. It can also be used in those scenarios. And basically, this policy, the benefit from the policy allows the business owner to offset the cost of, say, having to temporarily staff because that person is not there, or if you need time to find a replacement, or if you have loss of revenue during training, trying to get somebody else in place. That's when this type of insurance policy can kick in. So if you're a one person business, you are that key person. If you're a small business and maybe you have a sales lead who is bringing in a bulk of your revenue and something happens with them, you might want to have key person insurance on them. Now, if you are needing to exit the business, so say that you decide that you're going to retire, say that you become disabled and can no longer work and don't want to run the business anymore, say that you are forming a partnership with somebody and you want to safeguard for the future, then you should consider putting a buy-sell agreement in place. Now, a buy-sell agreement is not a life insurance policy. However, a buy-sell agreement is often funded through a life insurance policy. So the buy-sell agreement, it basically allows a business to continue without interruption or the obligation to fund the buyout with business assets and revenues. So the policy that you get basically pays for the buying or the buyout of the business. If there are two owners of a company, for example, each owner can have a policy on the other person. And then for each of those policies, the company is named the beneficiary. That way, if one or the other owners dies or becomes disabled or separates from the business, the benefit from the insurance policy is then um, paid out to the business, and then the business can then use that money in order to buy out the other person. All right, so that's all we're going to cover for today. I know I threw a lot at you, but if you're interested in talking more about funding your business using life insurance products or how you can use life insurance strategically to help your business, feel free to book a consultation with me today. I'd love to sit down and chat with you. All right, that's it for now. Talk to you later.